Good morning, everyone. This is Srikant, Rajan, and welcome back to the Stock Market Podcast from MPIinvest.com. Well, coming to the market yesterday, what a big fall it was, isn't it? It started off as a normal day. In fact, the first 15-20 minutes were looking like calm and the market was kind of stabilizing. But then came the sell off. In fact, till afternoon, it was a mild sell off, I would say. But then, at every point of time, it actually felt that, market was going to rise up from here. Finally this would happen, and people kept waiting. And then the last 1 hour, the big selling came in, and a lot of traders were actually put into trouble, and we had to book losses. Yesterday was still a good day because we still had a very good profit in Kitty, and we did lose some portion of it, but still for the week we are ending with profit in the Gold Club. So that is something that we are proud about. In spite of the market being so harsh and tough, we have been able to continue our streak of winning in the Gold Club. So that's something really important. So yes, market actually fell because we did discuss about the Federal Reserve being a little hawkish, and not only that, I would say the U.S. markets actually reacted in advance. But then Indian markets, why did they react? Like I told you yesterday, Indian markets never have a problem because our inflation rate is already at the target that RBI has set for India. So it is not a weakness that is seen in India, but it is a weakness that is seen in US. But then when the US market fell, what happened? Nasdaq was down. And with all this, there is already concern of IT sector, getting bombarded with the wrong direction because of the kind of the problems in US are coming in. So if recession kicks in the US, there are chances that these IT companies can actually be in trouble. So that's exactly why we could see huge selling pressure. In fact, you should actually you should open a chart and look at TCS, Tata Consult Services. Right, it was on a continuous fall for the entire day. Infosys was down, HCL Tech was down, Tech Mahindra was down more than 3%. So all these together, it was majorly the IT pack which actually gave in all this losses in the earlier part. But then in the afternoon, when the selling aggravated, people started selling left and right every sector. So there was major profit booking seen in the banking sector as well, and Bank Nifty continued to fall for the entire day. So overall, it was a bloodbath day in the market, Indian stock market yesterday. Not only Indian stock market, in the afternoon, the European market opened. They also started falling, and the worst part was after Indian markets and European markets closed, US market fell even bigger last night. At one point of time, Nasdaq was down by almost 4%, and finally closed just at around 3% minus. But still, there was a big fall in Nasdaq, Dow. Everything was down yesterday. So somehow I have a feeling that this was a little overreacted, or I would say a panic selling that was seen in the market. So what happened exactly in the US? So now we understood the weakness brought in to Indian stock market by the IT companies, but then what happened in the US? So yesterday the retail sales data came in, and what happened is the data shows that the retail sales have actually gone down in the US. So now, if you remember, the Federal Reserve has been hiking rates continuously in the US, and every time there was a bad data coming, that employment data coming bad. So that means people are more employed, people are coming out. So such things when started coming, it was found as a positive that probably this could trigger the Federal Reserve to finally kind of stop increasing rates, and probably that could come down and the interest rates hiking could be stopped. But what happened after Federal Reserve monetary policy meeting was that the Federal Reserve Chairman Jerome Powell came out and said that the Federal Reserve is going to continue to rise rates even through 2023 until the target of 2% inflation is reached. Where is 2%? Where is 7%? So US market has got a long way to go. So that information, or that hawkish tone, which actually said that the US markets are going to see continuous rate hikes even till the next year, in spite of the inflation in the US coming down than expected just 2 days before the monetary policy, was something which actually set the hawkish tone in the market, and the investors actually started fleeing the market, and that is where we could see the fall in the market. And at this point of time, when this retail data also showed that the retail sales have actually gone down. This actually kind of indicate that recession is kind of getting started. So if Federal Reserve continues to increase rates this way, the recession can step in quickly and 2023 can get into a complete recession. So that is something which people are expecting, and that's exactly why US market is puked and it's kind of falling so big. Now, naturally, when US market has fallen last night so big, IT sectors are going to see major bearishness today as well. So definitely that has to be looked out at. But then as a long-term investor, now it is time to look forward for the fall to settle so that we can actually get into good stocks. So good thing is that we have actually, at MPI family already taken out funds from equity when the market was at high, and portion of equity has already been moved to good investments like gold, silver, and bonds. So that would be deployed at stages as the market starts to fall. Now it is time to actually find a bottom. So now the way the market has actually reacted for yesterday and come close to 18,400. Now the most important support here is 18,350. If 18,350 is broken today, then it is time that I turn bearish for a short term. So that would be my view for the market right now. In fact, SGX Nifty is already indicating a 30 to 40 point gap down today. So yesterday after a close of 18,400, we might see the market opening close to 18,350 to 360. If the market doesn't recover from here, then it's time to turn bearish for a short term, and my trades also would be modified as such. If you look at the market right now, the major support lies next at 18,000. So if 18,350 is broken, then we have a next support at 18,250 and then 18,000, which I don't think would be broken in this week. So 18,000 can remain an important support, and probably this week we could expect the market kind of move between 18,000 to 18,600. So this is what I am expecting, and my trades would be based on that. Now for the investors, get ready with your funds. This is the time where you're going to get some good stocks at good prices. So now it's time to start investing in a SIP mode. Yes. So, you never know when the market is going to bottom out. But if you have a list of fundamentally strong stocks, it is time to start accumulating them in stages. So every day that you see a fall probably could be a day by end of the day by 3:15 to 3:30 should be a great time to add your favorite stocks into your kitty, because that is what can give you great returns over a period of time. So as investors, it is time to start investing in a SIP mode. Remember that. And I would say the sectors that you could actually invest on right now could be, first one would be the infrastructure industry. The next one can be the majorly the IT sector, but IT sector you'll have to wait for some more time, as the fall can now continue for some more time. So probably you'll have to wait for IT some more time. And the next important sector that we could actually look at is the hospitality sector. So this is also going to improve over this period of time. So these are sectors which I would be focusing on as we go forward. And banking sector is going to see some weakness, of course, for some time because of the huge valuation which has already come into, but this huge rally that is coming. So probably we could see some profit booking there. So again, some good stocks can come in that way also. So if you see from the banking sector, I would say again, you'll have to wait for 1 or 2 weeks probably. I will of course share what are the important stocks that can be looked at in the banking sector as well. So with all this, let us see today. Today could be a deciding day. If 18,350 is broken decisively, then I would say, markets tend to go towards 18,000. So that's something on the view. Let's see how things turn up. So now it is time to end the day and in the week. Let us catch up with more details on a Sunday meeting. If you're not a part of the community, the Sunday meeting is exclusive to the community. So if you're not a part of it, do join the community by going to the link given in the scroll here and be part of it free of cost. So with that, this is Srikant signing off, wishing you a great weekend and looking forward to catch up on Monday on the next podcast. Goodbye. Have a great weekend.